Hello, good evening. You're watching News 9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. This is Business Plus. We'll begin with markets. To my left is my colleague Suyash Maheshwari. Suyash, sixth straight session for the D Street Bulls party continues.
Yes, Shweta, in the last few sessions, Nifty and Sensex have rallied, and actually they are playing some sort of a catch-up rally where we have seen a divergent performance between mid-cap, small-cap stocks and Nifty and Sensex. Now, the good thing is both mid-cap space, the broader markets as well as Nifty are participating in the rally. Now, in today's session, as we saw, it was a sixth consecutive session of gains, and after a flattish opening, Indian markets continue to rise higher, and Nifty, as a matter of fact,
getting there at 20,000, just about getting there.
19,800 has been achieved, and Sensex also has climbed almost 66,600 levels. And Shweta, if we see the trend in the past 3 days, market open on a flattish note, then we saw a decline, but in the second half of the session we see a good pickup in the buying activity, and as a result most stocks are ending with moderate gains. Now, even if you see today, Nifty was up about 0.5%, closed above the 19,800 mark, on its way to close the 19,991 peak which it achieved in August. Sensex was up 0.5% above the 65,600 mark. Mid-cap space was the Nifty Mid-cap 100 index was up almost 1%, whereas a small-cap index added about 0.6%.
You know, I remember we discussed in fact extensively when the Mid-cap 100 touched 40,000. It's just about to touch 41,000. So the rally in fact has continued. Let's quickly get our guest Dipan Mehta, who is the Managing Director and CEO of Elixir Securities, joining us on the show. Dipan, thanks very much for taking time out. Good to have you back. Let's quickly begin with what's happening in the Dalal Street, on the markets. It appears that the Bulls party, the Bulls rally continues.
Yeah, absolutely. I think we are in a very, very sweet spot. And what I can say is that happy days are here again, so might as well enjoy them. I think it's a great time for long-term investors. Their conviction in equities has been very well rewarded, and whatever doubts which were there in terms of what equities can generate in terms of returns and wealth creation, I think all those answers we have got in the last few months or so. And still, I think the markets, the way the liquidity is, the way I look at the counters, there's still a lot of interest coming through. And mind you, all of this rally which is happening in mid-cap stocks and to an extent Sensex and Nifty stocks is still largely driven by domestic flows. And FI flows continue to be negative. I can't imagine what will happen if the FIs also start to buy. Then certainly I think we may have even more push on the upward side.
Hi sir, Suyash. So we had Mr. Sanjeev Bhasin yesterday, and he was of the opinion that Nifty, could cross that elusive 20,000 mark in the next couple of weeks or so. So what are your expectations? When are we touching that Mount 20K?
That Mount 20K, we already sniffed at it and came back a few weeks ago. So that's not the thing. I think more importantly is, where does it go beyond 20,000? But honestly, I think if you look at the mid-cap stocks and the small-cap stocks, a lot of them in the frenzy, they have moved up a lot. And while we are extremely positive, sentiment also is fantastic. I do need to, air a word of caution here that maybe putting money at these levels may not be the best idea. And investors who are waiting on the sidelines, please continue to wait on the sidelines. Don't jump in at this point of time. The markets may go up, it may get into a parabolic zone as well. But most of the stocks which you are thinking of buying just now, there is very little margin of safety. And also we will have one more earnings season starting from October onwards. So I'd like to just wait and watch and see how the October earnings season plays out. There's a lot of intraday volatility around that time, and that could be good opportunities to buy stocks. But for the time being, I'm in a kind of a wait and watch zone. And at best would like to trim a little bit of our portfolio, or if you have leverage positions, then reduce those leverage positions.
Okay. You talked about how we sniffed the 20,000 mark just about a couple of weeks ago and then came back from it, snapped those gains. Do you think that is likely to repeat maybe start of next week? We're already in September. A lot of fears and worries about what's going to happen as far as, you know, domestic conditions, macro conditions is concerned, especially inflation figures, demand on the back of inflation. What are the big domestic cues that we'll be tracking, and what is your hope as far as consolidation is concerned? Will that kick in next week, or is rally expected to continue?
See, it's difficult to forecast short-term movements, and look, the Nifty is less than 200 points away. It's maybe a couple of hours job for it to touch 20,000, but that's not the important thing. I think it's more important to see whether at these levels the mid-cap index starts to kind of flatten out, or there's a correction over there. Because I think last 4 or 5 months have been exceptionally good for the small mid-cap indices, and a lot of investor money has gone into those stocks. So from our perspective, we are watching that index more than the Nifty and the Sensex as well at this point of time, and 20,000 may come and go. But I think what is happening in the rest of the market, the broader sectors, that I think is more important from our perspective.
Okay.
So Demat account openings in August were at a 19-month high. Now we are seeing a resurgence in the primary markets as well. So I mean, these factors typically indicate that a structural bull run is in the offing. What would you say about that?
We are in a structural bull run, and it started from the March 2020 lows, and since then it's been almost one way up. There have been a few corrections along the way. There'll be a few more corrections on the way as well, but I don't see any major speed breaks or any major resistance, at least until May 2024, where the big event is there, the elections, the Lok Sabha. I think until then, I think markets are in a very positive zone. What happens in May 2024, let's see, then we cannot judge at this point of time. But right now we are in a multi-year bull market, and there seem to be very few threats. Not that there aren't, and we'll come to know only afterwards. But for the time being, I think all the fundamentals, corporate earnings, liquidity conditions, government policies, flow of news flow, all of them are pretty well aligned for the markets to scale higher and higher. But as I said, I think we should be prepared for a minor correction. Any point of time, any point of time it can happen.
Okay, and I also want to quickly touch upon mid caps, because you've shown some confidence in mid caps, and you said that is where the confidence and perhaps the future lies. It crossed 40,000 just about a couple of days ago. We were here, we discussed how that in fact is brilliant for Indian markets, brilliant for mid cap companies. It's about to touch 41,000. What is driving the rally in mid caps?
And also, if I can jump in, the divergence in the performance of large caps and mid caps, do you expect this to close anytime soon?
See, in a bull market, you will have this rotation of sectors. So mid caps are doing well, but at some point of time, they will have a valuation resistance. See, mid caps, and they derive their valuation from large caps, and there is only so much a percentage of premium that they can trade at the large caps. So at some point of time, we will see the money going out from the mid caps into the large caps. My sense is that will happen when we see solid FI inflows, because that money will go into the index stocks in the large cap companies. And when that happens, I think a lot of retail investors also will join the bandwagon over there, maybe even through F&O. So this rolling from large to mid to small, that will keep on going on. Coming to the first question of yours as to why is this rally there in mid cap stocks? First of all, I think they are playing catch up. Secondly, I think if you see across the board, with the exception of a few pockets like maybe software or to an extent, all the industries are doing very well. I mean, look at it. I haven't seen this happen in many, many years. You study any industry and you feel the fundamental of the industry has significantly improved in the last 1 or 2 years or so, whether it's real estate, whether it is automobiles, that means auto ancillary tires come into play. Then banks have had the best ever time. I think it's blue sky scenario for the banks. We have a fantastic capex cycle which is playing out from the private sector as well as public sector. And the elections down the corner, there'll be more government expenditure. So I have an entire capex cycle doing well. When you look at electricity generation, that's also moving up. Benign oil prices means that oil refining sectors and oil companies are also doing pretty well, although that may change because oil has touched $90. So like that, when you go sector by sector, sector by sector, with the exception of cement, where there's perhaps intense competition, maybe in odd sector like sugar, software, some select exporters. Beyond that, I think across the board, we are seeing fabulous fundamentals play out. And this entire shift, towards the organized players is certainly benefiting the stock market in terms of higher returns.
All right, and since we're talking about sectors, let's also quickly understand from my colleague Suyash how sectors performed today.
Certainly, Shweta. So, some of the outperforming sectors in today's session was the banking stocks. Now, Nifty Bank, Shweta, has joined the bull party. It was not participating in the 6-day run, but since yesterday, we have seen the Nifty Bank space has rallied about 1.5% and also scaled the 45,100 mark. So we are seeing some buying interest in financial stocks. As a result, Nifty Bank was up more than 0.5%, whereas as you can see, even individual stocks in the Nifty banking space, IDFC saw some correction in today's session. Axis Bank, PNB, Kotak Mahindra, they performed fairly well. If we can come back to the sectors, we saw some profit booking in the pharma names, Shweta, today. They were one of the few sectors which did not participate in today's run up. It was down about 0.4%. Media stocks, which gained more than 3% in yesterday's session, also saw some correction today. They were down about 1%. IT stocks, which have been under pressure, but they have kind of rallied in the last couple of weeks, saw some profit booking also at higher levels, and they were down marginally at about 0.1%.
All right, so Nifty FMCG, Pharma, Nifty Media, Nifty Metal continue to be underperformer today in today's trading session. But I think surprisingly, Pharma had done well in the past couple of sessions. It's down by almost 0.36% today. Nifty Bank outperforms today and
so, Shweta,
reversing the trend perhaps.
Definitely, Nifty Bank is reversing a trend, and it did not participate in the bull run that was going on in the past couple of weeks. But since yesterday, we are seeing buying interest in the banking names, and even today there was a report which suggested that RBI has decided to withdraw the incremental cash reserve ratio which it had implemented on August 10, and RBI will do this in a phased manner beginning September 9th. Now, from what I am reading, the expectation is that RBI said that 25% of the amount of ICRR will be rolled back on Saturday. Another 25% will be rolled back on September 23rd, and the rest will be rolled back on October 8th. So
what is going to be the impact of this announcement by RBI? Dipan, I want to quickly get you in. Is that the reason perhaps why Nifty Bank is up 0.62% today? The incremental cash reserve ratio would basically, the big announcement that has come in from RBI, would that have an impact on bank? Likely to have an impact. There'll be more liquidity going forward. Is that the reason why the stocks were up today?
That could be one of the reasons, I think, but most importantly, I think we have a superb, I would say, economic activity picking up in the country. Industrial activity is looking up. As I said, capex cycle is looking up, and large sectors like housing and auto also are doing well. So demand for credit is very strong, and NPA cycle has still not turned bad. A lot of banks, NBFCs are focusing on lending to retail, which is on the safer side. And I think Street is recognizing that, so which is why we are seeing that banks have been leaders in the past, although they've been laggards last few weeks or months maybe, but that can easily turn around. You see, this sector rotation, why it happens, I don't understand, because fresh money, when it wants to invest, it looks for the laggards, it looks for where the value is, where the P multiples are low, where there's some comfort, some margin of safety. And right now, I think banks provide that kind of a oasis where valuations are still reasonable, there is secular growth, and they have underperformed. So, which is why I think, who knows, the next few weeks could belong to the banks.
Okay.
So, also I just want to understand what will be the impact on rupee, because rupee had hit a record low yesterday, and it has been under pressure. Now, this excess liquidity,
actually all-time low.
All-time low.
Come to think of it, down by and has gone below 83 levels. What's going to be the impact, I think, to continue my colleague's question here?
There will be excess liquidity now, right?
Yeah, I think that's quite disturbing that the rupee has hit a new all-time low. I saw that news, and And that I was pretty disappointed with that despite having such humongous forex reserves, we feel the rupee at these levels. All I can say is that the positive streak on this is that it will benefit the exporters, especially software companies, which are facing challenges because of global macro trends. But on the whole, rupee depreciation is not good for the country. Certainly reduces dollar returns and makes our markets less attractive to foreigners. But I think it's a matter of time before this starts to reverse. This is not India specific. That's the most positive thing. Maybe you may see a further weakening of the rupee because the oil prices have been moving up, so that may put some pressure over there. But no market is perfect, no economy is perfect, and we have to deal with a few problem areas. Like for us, it's rupee at present, and maybe even the monsoon also. Although I think it's raining pretty well in Mumbai today, so I hope rest of the country also is receiving rains and you are catching up on the deficit over there.
All right, and since you continue talking about domestic cues and perhaps the macros and the rain and the inflation, what are your hopes for the month of September while we await the results in the month of October, starting October 1st? What are your big expectations as far as this month is concerned? It's 8th today, so literally first half of the month we're through with the first 10 days of the month. What are your expectations like?
See, we discussed this thing, shifting of money from mid cap to large cap. I think that may play out in the next few weeks before the earnings season starts in full earnest. And that I think is around about 20th October onwards is when we see results coming in thick and fast. So I think that we will see this churn happening in the next 3 or 4 weeks or so. I'm pretty certain that the Nifty and Sensex may continue to rally beyond 20,000. But you may see some correction, 10, 15, 20% in individual mid-cap stocks, and maybe the mid-cap and small-cap index also may try to start, going down. So that divergence, reverse divergence may start. That is one thing. And secondly, I think this earnings season could be quite interesting from many perspectives because large sectors, there have been some developments, like for example, banks. We need to see whether there's a pressure on net interest margin because cost of deposits has been moving up. When it comes to software, we need to see whether the order wins are actually getting into kind of execution mode and how the billing is happening over there. Automobiles, we need to see whether the sustenance of incremental increases in realization, how that is playing out. Of course, we have the volume numbers with us. So like that, so on and so forth. I think every economy, every sector, there are certain nuances which we need to track. And that will certainly have an impact in terms of ideation of new stocks and which way the market goes on from October onwards also.
So another sector that we have been tracking is Nifty Pharma. Now the pharma space has been one of the best performing sectors. Nifty Pharma has rallied about 30% year to date. But in the last 1 month or so, we are seeing some selling pressure where the index has declined by about 2%. Now, what's your outlook about this space? Is it overheated or is it time to initiate fresh positions?
Also, just the news triggers on that. We know that Cipla is out for takers, and we don't know who is going to firmly buy Cipla at this point in time. Bids have been made by Dr. Reddy's. Bids have been made by Torrent. We don't know who's actually winning in the race. But what impact has that news had? Because we saw Cipla was up. We saw Dr. Reddy's was up in the past week. Is that an impact of that news trigger on the pharma stocks?
See, first of all, we were pleasantly surprised by the pharma numbers which came through. And one reason for that is better pricing trends in the US generics market. And also, I think operating profits and margins have moved up because raw material costs have kind of stabilized. And clearly that had a very positive effect on entire pharma industry per se, right from Sun Pharma, Dr. Reddy's, Lupin. Aurobindo has been a big outperformer because of this particular trend. Now, typically, pharma exports, whether it is to Europe or whether it's to US generic market, is becoming more and more commoditized. So one of the aspects of commoditization is that you may have upswing in prices, but you may also have a correction in product prices as well. So right now, I think it seems that the pricing is stable over there. It can turn at any point of time. But right now, I think pricing is decent for pharma exports. They have the benefit of base effect as well. So I would think that maybe pharma can do well for one more quarter at least. It's just that I'm not prepared to pay a higher valuation multiple for pharma stocks because I'm expecting more volatility in earnings over the years. It's no longer a secular growth sector as it was maybe a few years ago or so. And from that point of view, I want to be a bit selective. But I think companies focused on domestic pharma, they have a great future. Company like Mankind, JV Chemicals, Eris Life Sciences, Disclosure we and Trans are invested, but those are all trading at expensive valuations. So we're looking for good entry points in these companies which have got domestic focus. Maybe when there is some comfort as far as valuations are concerned, that may be a good entry point.
All right, and while we're at it, and I know we have to let you go, Dipan, I just want to quickly run our viewers also through top gainers and losers today.
Certainly, Shweta. So among the top gainers in the blue chip space was NTPC. The stock rallied over 2.5%. Coal India is another stock. In the last 4 out of 5 sessions, it has been among the top gainers in the blue chip space. In fact, in the last 5 sessions, the stock is up almost 18%, Shweta. BPCL, Tata Motors and L&T. L&T, I also want to touch upon it. L&T today crossed a market cap of over 4 lakh crore, and it is now among the select few companies that boast a market capitalization of over 4 lakh crore. The stock has been on a rise since news came out that about its involvement in the Chandrayaan mission and how it helped ISRO in achieving that mission, and the stock has gained significantly. It's in fact, if you look at the year-to-date returns, the stock has rallied more than 30%. Okay. Now talking about losers in today's session, UPL was a top loser among blue chips. The stock was down about 1.03%. Apollo Hospitals was down about 1%. The stock was up about 3% after recently. So we are seeing some profit booking over there. Now the stock has been in the news because Apollo Hospital recently said that they'll be expanding their capacity. Now they'll be adding 3,000 more beds to their monitoring program. Currently the monitoring program only has 1,000 beds. Okay. So a big boost in capacity over there. That's why the stock has been in focus. Other stocks that were in the news were Ultratech Cement. It was down about 0.77%, and SBI Life, which declined about 0.75%.
All right. So if you look at top gainers today, energy stocks were shining in today's session. Coal India up by 2.65%. Coal India, in fact, has done exceptionally well. Dipan, rising coal demand, not enough coal supply, or enough coal supply, but rising demand, therefore playing up on Coal India stock, or is there more to it?
I think people are looking for low price to earnings multiple stocks, and I can see your screen NTPC, Coal India, BPCL, Tata Motors are in terms of valuation pretty attractive levels, especially NTPC, Coal and BPCL. L&T, of course, is up because of the news you said just now. So I think part of the reason is low valuations. And of course, I think you can see that power demand is at an all-time high in the country, which is what may be driving NTPC and Coal India. NTPC, I think, is interesting because they're getting more and more into renewable energy, and that, I think, is showing in a better P multiple.
All right, Dipan, thank you very much for taking time out. Really appreciate you joining us with your inputs. We, of course, hope that you come back to us very, very soon. But we'll move on now, and I'll thank my colleague Suyash also for bringing us all the stock markets update every afternoon. But moving on, the G20 Summit 2023 will take place on 9th and 10th of September in the national capital, and we keep bringing you updates right here on Newsline. All right, more than 30 heads of state and top officials from the European Union, invited guest countries, 14 heads of international organization are expected to attend the G20 Summit. UK PM Rishi Sunak is already here. Japanese PM also has arrived in Delhi. Remember, the G20 is primarily an economic grouping of 20 biggest developed as well as developing economies under India's presidency. Issues that are likely to come up for discussion include cryptocurrency regulation, the multilateral development bank reforms, furthering digital public infrastructure, climate financing, formulating common debt relief framework for distressed countries. All of that likely to be a part of the agenda. To discuss that and more. Joining me is my colleague Rakesh Kharsa. Please grace us with your presence here in the Newsline studio. Let me also call upon my colleague Krishna Kumar to join us perhaps and be a part of this discussion where we are hoping to, please do walk in, Krishna, wherever you find space and time from.
Please.
And let me, hi sir, good to have you back, sir.
Yeah. Welcome, Krishna.
It's the eve of the mega, much awaited summit under India's presidency, under India's leadership. Host of leaders are already here in the national capital. There is this, I think, excitement bubbling in the air. You know, I think we can all feel it around us since we are here at the heart of all of it. What are you hoping for? What are your big expectations?
Thank you, Shweta. First of all, it's like that big ticket Indian cultural perspective where we say "beti ki shaadi hai."
Okay.
So in that sense, the whole nation is out in terms of Delhi is all dressed up and decked up to receive the heads of states, and many of them have already come in. What is happening is that I like the Foreign Affairs Minister, and many of us like him for one-liners. They're very impactful one-liners. So I was just thinking about that one very, very impactful line he made a few months ago in a press conference. He said the idea is to take India to the world and bring world to India.
Right.
So G20 presidency under India, that one line sums up the entire sentiment.
Okay, the world is here.
The world is here. And consequently,
okay,
as a positive corollary, we are taking India to the world.
Absolutely.
So in that sense, it's a big ticket sentiment. See, we have to be a little realistic. I keep saying this. I'm not undermining the importance of a joint communication and all that, which is the order of the day. But let's not get too, so to say, overboard on signing of an agreement, which is important. There should be deliverables. There should be an outcome orientation in all our conversations. At that level, outcomes are very, very important. But from India's perspective, the fact that so many, leaders coming here and they're soaking in the India sentiment or the India movement, that is a big takeaway for the domestic and international audience. The whole world is bullish on India. Let's have no doubt on that. If you see that from an IMF to a Morgan Stanley to a World Bank to, Goldman Sachs, and yesterday the Harvard Business Review report I was reading, I mean, there isn't a soul who is not bullish on India. Not that we don't have challenges, but let's be cognizant of the reality that India is one big bright spot in the global economic arena. The context to that comes from the fact that when we set off in 2023, the same IMF pointed out that India and China would corner about 50% of the growth, which was an admission that the entire West is, so to say, in a dim state in terms of growth prospect. And now what has happened is that in the last 8 months, China is imploding. So it's all eyes are on India. So there's a huge sense of expectation, expectancy, also a huge sense of responsibility. That means we need to not only sustain the movement, to build the momentum, we have also to be very, very careful about, not making any mistake at this stage. So I think G20, coming back to the
agenda. I like how you're cautiously optimistic.
We have to be cautiously
optimistic. We often hear RBI governor saying those words, but I like your tone of being cautious and not spoiling the party.
Yeah, because I'm cognizant of the fact that, if we pin down G20 outcome to a joint communique, which is unlikely on key issues.
Very unlikely.
Because the Chinese are not here, the Russians are not here.
The Russians are not here.
The heads of states have to sign that joint communique.
Right.
I see that as a hindrance. And why they didn't come, that is the origin of the hindrance. So in that sense,
and there's a lot of geopolitics.
There's a lot of geopolitics. See, and G20 also, as someone rightly pointed, it's not one common tent. The tent is common, but within the tent right now is New Delhi.
Divided fractions.
It's a fractious group, and it has a noble intent. But if you look back at all G20s that have happened in the recent past, the outcomes are very low, I think, on sentiment, on emotion, and the need to be together. That need to be together to solve larger problems of the world, which you identified in your opening remarks. I don't think that has been felt more strongly than ever before than in India today.
Absolutely.
And on agenda, 3 or 4 very, very important issues. I think India's export, as we keep saying, digital public infrastructure goods, climate financing, our push for reforming the debt infrastructure, which is a difficult challenge. But, tomorrow and day after is the big day. And we must also simultaneously not lose track of the fact that there are bilateral meetings. So the G20 multilateral forum has given us a great opportunity to also be one-on-one with the big ticket, Western leaders led by the US President.
Right, big ticket Western leaders, all of them here in India. Let's quickly, for the benefit of our viewers, take them through what's on the agenda as far as the economic agenda is concerned. Now that we have set the ball rolling for what the expectations are, why is India dressed or decked like a bride. Let's also talk about what's on the economic agenda. A joint communique may not be likely, but India is going to push for a lot of bilateral ties. It's going to push for regulations, framework of regulations. Krishna, what's going to be the big agenda?
Right. To start it off, at the end of the day, something like the G20 Summit in India hosting it, I would call it like hosting like the Olympics of geopolitics.
Okay.
So, and only that it's even more rare that, India gets a presidency like this of the top 20 countries in the world, US, Russia, China, you name the biggest powers in the world, they're going to be there. And India hosting it is a moment in history for India. It's a rival on the global stage as a superpower, and it's a great posturing for what it's actually, what India has been for the last decade or so, the kind of growth it has put up. So in a situation like that, where so much of economic progress is what India has pushed India into this presidency as well of G20, crypto regulations and reforms on MDB, which is the multilateral development banks, are two things that India has been talking about a lot. It's been part of the so-called stated agenda, if I may. We're yet to get the final agenda. So these two will be keenly looked at, Shweta. One is how do we regulate cryptocurrency across the world? Conversations on that. I don't know they'll arrive with the final regulations, but definitely that will be an important conversation that will be had over there. And apart from that, at a time when there's questions on the relevance of the IMF and the World Bank, especially when it comes to dispersing credit to Africa and other Asian economies, the importance of setting up multilateral development banks or MDBs is another thing that India has always been pushing for, and that will be a very important part of the conversations at the G20 Summit as well. So these two, I think, are sort of headliners as far as the economic outcomes possible from the G20 Summit.
Absolutely. And a multilateral development bank, Rakesh, I think we can borrow from your wealth of knowledge. We need to have alternatives to big lending institutions that are largely hegemonized by Western powers, Western economies, and in a sense then you have developing economies that suffer not just with higher interest rates but also debt, huge massive amounts of debt, and in this case often the lender appears to be China, which is not making it but has a reason to not make it, because it's going to be uncomfortable conversation around debt restructuring for a lot of at least Asian economies that surround us.
Absolutely, but the problem is that China is not here, and whatever movement India wants to progress on this very, very important perspective, there is a veto by China. China is taking it in another direction. Right. China is colonizing the neighborhood, for instance, as I said, using debt as a geopolitical, geoeconomic weapon, and we are calling for a reform both from the Western perspective and also from the global South perspective, because we need far greater flexibility in terms of building that debt as a service rather than as a weaponizer, in terms of improving quality of life across the world. And there are benchmarks, there are discriminations. For instance, I keep pointing out this example. Sri Lanka, it took almost 3 years to get the $3 billion IMF package, that too with stiff conditionalities. But for Ukraine, they got it in 3 months. So because there is a vested interest in Ukraine.
Absolutely.
So it's not just China, Shweta. I think there are invested ideas in the Western economies, big ticket countries who are wanting to drive MDBs in a particular direction.
Right.
But there is also a collective failure at our end also. Look at BRICS. We discussed BRICS. There was a BRICS summit which I think Prime Minister also attended. The first and foremost tangible outcome of BRICS, to my mind, has been the new development bank. It was called BRICS Bank first. Now it got rechristened with KV Kamath as the founder, CEO of it, and MD of it. It was supposed to be a paddle or a mirror of an IMF. Early days, long way to go, but we must push more in that direction. Okay. But there again, the big ticket challenge or the big ticket perspective, whether China and India need to collaborate on the economic front given their political trouble on the border, or they continue to fight on each and every inch.
Absolutely. Whether they should fight, whether give up. I mean, at this juncture, I think the most important thing to discuss is that curtains are already rolling on what's going to be a mega event starting tomorrow. All eyes will be on India. India's moment is here. It has arrived. Whether there'll be a joint communique or not, India will pass on the baton to Brazil, which is going to be the...
But, in terms of the intent.
Right.
Joint communique anyway will be there.
Absolutely.
But, I don't think it will be a closure.
Right. And whether there's every participating country will agree on it or not.
Yeah.
Just as it happened in case of Bali, there was no agreement for that matter on the joint communique, but the baton will now be passed.
It went on for a few days before they could even arrive at that final communique, if I remember correctly.
I mean, we
it took them about 3 days to arrive at the final communique.
We have a challenge in terms of the ongoing war, so that's casting a shadow even without the two members being there.
Absolutely. So lots of geopolitical interest there, but we will of course keep bringing you all the details right here on News 9 starting tomorrow morning. And moving on, you must have all used UPI payments at some point or the other to transfer money immediately. Now, UPI has become the fastest growing payments mode in the country. But a new UPI innovation has come to light called the UPI ATM that offers cardless cash withdrawals. This was showcased by NPCI for the very first time at the ongoing, or in fact just closed, Global Fintech Fest in Mumbai. Dubbed as India's first UPI ATM, the new feature eliminates the need to carry a physical ATM card and is actually being hailed by many internet users a game changer. On Thursday, Union Minister Piyush Goyal posted a video on X, formerly Twitter, that showcased Ravi Sutanjani, a financial influencer, demonstrating how to withdraw cash from an ATM using UPI. Well, Ravi Sutanjani is joining us here to show us what he did and why that video made him famous. Ravi, thanks very much for taking time out. Let's quickly begin by understanding. Firstly, congratulations. I think it's not every day that we get to hear and we get to try on a very new innovation, and you become one of the first few individuals to have done that and to have showcased it to the world how it's done.
Thank you so much, Shweta, for having me again on the show. Glad to be back on News 9. Indeed, it's a proud moment for Indian fintech and also so many Indians, right? NPCI has recently introduced a new form factor where users can make withdrawal from ATM machines without even need of a debit card. So just like you scan and pay to nearby, shops or send money to your friends. Similarly, you can scan a QR code at any supporting UPI ATM and you can get the cash dispensed out of it. But there are so many other innovations that, regulator and fintech companies have shared in the Global Fintech Fest 2023. So absolutely proud moment, yeah.
All right. And, NPCI also introduced Lite X along with another UPI-led innovation. What do they mean? There's a whole, a bouquet of offers that NPCI has made. What does it mean for the future of payments for an average person?
So the fundamental difference how India is shaping our fintech landscape, not just for country, but also setting an inspiration for other countries across the globe, that we are focusing more on inclusion and trying to make everyone part of this ecosystem and not just some top 1% or 5%. For example, there are four, or I would say 5 new features that got introduced on the top of UPI, or I would say on the layer of UPI, and I'll try to explain into step by step for the benefit of audience. So one is credit line on UPI. So just like you link your bank account and RuPay credit cards on UPI, you can also link your credit line that will be extended by banks to selected customers in phases, and you can make payments using your credit line to any supporting UPI merchant. So this also solves a big problem of affordability for millions of Indians who don't have a credit card necessarily, but credit can give them an edge to become more participative when it comes to financial ecosystem. Then you have conversational payment, which is a very interesting development coming from NPCI, where you can make payments by using your voice. So just like send 100 rupees to Papa or send 100 rupees to Rakesh Kumar, and the money will be sent from your linked bank account without even using the phone. Obviously, there will be a security and authentication that will take place. Similarly, you can make bill payments using voice, pay my electricity bill. And just after a confirmation, your electricity bill can be paid post a voice confirmation. The UPI Lite X feature you're talking about, again, it's also a big problem of inclusiveness among Indian audiences, where even a feature phone using NFC near field communication technology, they can transact with each other without even need of an internet connection. Simply put, two phone that supports NFC. You can also paste a sticker that was introduced in the Global Fintech Fest itself. And transaction can be done by tapping two phone or tapping the phone into a smart POS machine. And once the phone is back on the internet, the actual debit happens on the account. The last and I think very innovative feature coming from NPCI again is tap and pay on UPI. So just like you tap your debit card, prepaid card, or a credit card on the POS machine, similarly now UPI is going live on tap and pay infrastructure. So it will make payments more easier, for anyone either who have NFC in their smartphone, or they can paste a tag in their smartphone and they can make a payment out of it. So having said that, all of these points, not only making India on top of global fintech innovation across the world, but at the same time, we are making financial accessible for everyone. Yeah,
right.
Shweta.
Ravi, the only thing I wanted to ask you is this: the one other innovation that they're wanting to use UPI for is the CBDC, the central bank digital currency, which is in its pilot stage right now. The retail pilots are going on. I don't know if you've been one of those who've been invited for these retail pilots, but talk to us. The question is, in my mind, when I talk about UPI and UPI QR code being used for making e-rupee payments, is that, when you have UPI, why do you need e-rupee? So I'm just asking, your thoughts on the subject.
I will certainly take that up, and I think India is also one of the country to have and develop their own CBDC. In fact, Honorable Governor itself has, shared some insights on CBDC with numbers. So if I remember correctly, as of August 31st, there are more than 13 lakhs users live on CBDC and over 3 lakh merchants are live. And the best part about India CBDC is that it's going to be interoperable with UPI infrastructure and network. Simply put, if you have access to RBI's digital currency or digital rupee, you may be able to make payment on any UPI supporting merchant QR code using the digital rupee. That is I have been part of the beta from early days in using CBDC of 3 banks currently. Adoption will take some time, and RBI is expecting over 1 million transactions per day by end of December 2023. The benefit, if I am particularly talking about, and in fact I'll be sharing more insights on my Twitter, is that while UPI is going to link with, you can link with your bank account, credit card, and now with credit lines, and there are wallets and PPI. At the same time, CBDC solves a big problem statement. So just like you carry cash in your pocket, you can load CBDC into your wallet that is being issued by banks in phases. Currently, that is still in beta. Once the public rollout will be completed, everyone will get access to transact in digital rupee. But when you use UPI, you have multiple entries in your bank account. But similarly, when you use CBDC for making payments, the money is loaded in your wallet and it gets transferred to the beneficiary. It can be on P2P transfer or on merchant transfer, right? So you are not having hundreds or 50 or 10 or different entries in your bank account, and also reducing load on the server. So every time when you make a transaction using UPI, there are multiple intermediaries involved in between, right? Same is not the case with CBDC. So these are some of the benefit, but having said that, interoperability is going to be a very major factor for CBDC with UPI.
Right, Ravi, lovely hearing your thoughts on the subject, but also we're requesting you, we have a wonderful documentary out on the same. We're calling it the Dilemmas of a Digital Currency on the e-rupee. It's a documentary that we have on our OTT platform News9 Plus, requesting you to watch and share your thoughts on it on Twitter if you can. Lovely listening to you, who's been part of retail pilots for e-rupee, talking about it. Great having you on the show.
Absolutely, Ravi. Thanks so much for taking time out once again. It's so lovely to have a young person like you, not just innovating, testing those innovations. I wish I were a part of that, but I think we're seeing history in making.
Thank you so much for having me on the show, Shweta and Krishna Kumar. Always a pleasure to talk with you. It's more important for people like me and people like you to educate a lot of retail audiences who don't understand nitty-gritties, but we are here to simplify a lot of these things for us. So until next time, thank you so much once again.
Thank you, Ravi.
Thank you.
All right, we're going to move on now and finally perhaps close this bulletin with what seems to be big numbers coming in from that release, Shah Rukh Khan's much awaited release. And that release, Jawan, made historic numbers on day one. My colleague Krishna Kumar, who just left me to stand and go there in front of the screen to perhaps talk us through those numbers. Those numbers are groundbreaking,
eye-popping,
eye-popping.
You keep using synonyms like that. You can keep
I'll
going.
stop using
Historic
synonyms
is
now.
what I'm calling it, because it is history. Look at what's happened on day one as far as Jawan is concerned. Highest opening for a Hindi film, beating his own previous, which is Pathan's day one collection. So Pathan did hold the record for a Hindi film, beating that. Just India collections alone, 75 crore rupees, 65 for the Hindi version, 10 crore rupees from Tamil and Telugu versions. Day one total worldwide collections, Shweta, right now, it looks like, hold your breath, 150 crore rupees on day one. That's the kind of numbers that Shah Rukh Khan is doing. Biggest single day collection for a Hindi film, as I've been talking about. Shah Rukh Khan's film doing this in the context of other hits. You have Gadar 2 happening, you have Jailer happening, and then Pathan still. You know, it began on that auspicious note of best pre-sales advance booking of 50 crore rupees plus. So, you know, it was set to make history. It was very,
Did you pre-book the ticket?
No, I did not. I was one of those 25 crore rupees who booked the tickets on that day. Well, because 50 was pre-booking, 25 was the first collections on the first day. Fourth biggest opener in the history of Indian cinema. This means after RRR, KGF 2 and Bahubali 2, it is Jawan, which is the highest opening for an Indian film across languages. Hindi cinema making its mark finally. Bear in mind, releasing it across 10,000 screens across the world. It's normal, it's not obnoxious, but this is the kind of release that a big star film gets, especially like a Shah Rukh Khan film, who has a huge audience abroad, bear in mind. And that's the reason why you're seeing Shah Rukh Khan make 75 crore rupees on day one in India and 75 crore rupees from overseas. It's the same. Shah Rukh Khan makes the same amount of money on day one, both in India and outside the country. Budget, they say it's around 300 crore rupees, 200 to 300 crore rupees, the kind of budget at which this film is made. And what really heartens me was the fact that this film, the entire cast and crew was from the Tamil film industry. The villain, the heroine, the music director, the director, the writer, the cinematographer, the art designer, the production designer, all of them. It's a beautiful marriage of Hindi cinema sensibilities with Tamil cinema sensibilities. Totally perfect strategy from Shah Rukh Khan, working wonders at the box office. Back to you, Shweta.
Absolutely, working wonders for Shah Rukh Khan and for the entire cast and crew of Jawan. Remember, the weekend is just around the corner.
Yes.
So the numbers are going to change, and numbers are going to change upward dramatically.
Apparently near over 300 crore rupees for the weekend, near 400.
Okay, so that's the prediction that's coming in at this point in time. We'll come back to you perhaps on a Monday evening to give you updates as far as Jawan's collections on box office is concerned. But with that, it's a wrap on this bulletin. Thank you for watching.
ChatGPT. It can generate codes and human-like responses through text, write stories, and do a lot more.
I work in a newsroom with anchors, researchers and scriptwriters, graphic